Welcome to Agency Acquisitions and Exits. I'm your host, Peter Lang. I am so excited to welcome back Mark Homer. You may remember him from the episode. Hopefully we link it here. He sold G&Gf, Get Noticed, Get Found, to a strategic private equity-backed buyer. And he was not done. And so today we're going to walk through what he's doing now and what got him to what he's doing now, and the exciting dynamics of M&A that continue post-sale. Mark, welcome back.
Thanks for having me, Peter. Or thanks for having me back again, I guess.
I think you also come to all the events of mine and you tell your stories. Like, Mark, I asked you to share this.
You get to see my face. Yeah, you see my face way too much.
4 or 5 times a year, I'm fortunate. You and Beth, it's wonderful. And then you're just such a shining example to the industry and to folks who are acquisitive of what's available to them when they really take it seriously and take action. So where we left off in your story, you had transitioned the business over, and you formed your HoldCo. That's the setup. Walk us through what happened next.
Yeah, I think as we last recorded, I had transitioned most of everything I needed to do with G&Gf, right? So I was just there kind of monitoring and making sure things were done. And that wrapped itself up after a couple months since we last recorded. So don't worry about the old business. It did set up the holding company and started kind of following the process. Things I was doing when I was at G&Gf, when I was looking to acquire into G&Gf at the time, I just started following that process for my HoldCo, right? I was reaching out to people on LinkedIn. I really leaned into my network. I have a strong agency network, having gone to a lot of agency events, been different masterminds, entrepreneur organization, EO, there's just a lot of people I was connected with. And so I leaned into that a little bit. And I think as people heard my story, I got a lot of people asking questions and following up and saying, hey, would you be interested in helping me with some of this stuff? And that led to some very serious conversations with a number of people. I will say one thing I learned, and Peter, I think you told me to expect this, was there's a lot of scary businesses out there. I would love to help everybody, but man, it's just businesses weren't ready to be acquired.
Yeah. And kudos to you. You are a great resource, not just to EO, but to others who reached out to you and said, Mark, love your story, love your journey. Got a minute, and you gave them minutes, and you have not only the insights of your professional career, your agency career, but this, really amazing lead of a transaction to a serious buyer for a successful exit that many can learn from. And so it's very easy for got a minutes to turn into advisor and helping me with things and seeing a lot of messy businesses who want your help or want your money.
Yeah.
You got pretty far with some folks, though.
I did. And I'll be honest, there's still a number of people I'm staying in touch with and watching, see if they're, how their business goes, if they can turn the corner on some things and some things we had talked about. And I think you're right. I am somebody who's very quick to say, let's jump on a Zoom call. I mean, just one of the things I love is being able to talk to other business owners. And then if it's agency owners, even better, right? So if I get to just, talk about, compare notes on all the things we love and hate about it, or love to hate, however you want to say it. And just, compare notes and then provide any guidance, things I'm seeing. Cause again, one of the little benefits now is when you start talking to a lot of agencies is kind of like getting above all these businesses and looking at some of the trends you see. Being able to jump on the phone and just kind of sharing some of that has been, I don't know, it just feels really good for me, but I just enjoy those 30, 40-minute calls every week that I get to jump on with agency owners. But yeah, I would say a few have turned into, some longer leads, but one kind of early into the process, somebody had asked hey, how could this work if you came in and helped scale this business? And they were a solid business. We took it pretty far. I think they even came down to your event. So I kind of worked with you and we got them to the event. So it was actually really helpful, right? Because you're getting an agency owner to come in and understand the whole process. We're not trying to hide anything here, right? Acquisitions is a financial event. It's a business event. It's not some kind of mystery. And so we brought her down to the event. We got to meet in person. I got to have dinner with her, and my wife got to meet her and stuff, which is important when we're using our money to invest in other agencies. It's because it's kind of like a family office holding company, right? And we went pretty far down that path. It ended up not working out at the time. And we'll still, we're still staying in touch, check back in. She was looking to head in the near term. I think she wanted to kind of shore up some things before she looked for outside investment. But that was great, right? Great process.
That's an important thing to highlight. So, multiple seven-figure agency, close to $1 million in profit, distributing good, healthy cash
Yeah.
flow and distributions to the owner, had just hired a salesperson or was being proactive in sales, I think, if I remember correctly, and
Yep.
was very
Yep.
optimistic that was some investments that she had made that were going to flower into the new year, and had a expectation of value on that future performance versus where she was at today. And you're like, I get it. You were in that position where you brought in salespeople in your past agency and hand over the reins, and then they run it, and then it grows outside of the owner's involvement. And so you empathize with her and said, okay, well, I'll move on with the next one. Let's stay in touch. Reminds us, if you haven't scheduled the
Absolutely.
call, Mark, did you schedule the call? It's 2026. No.
We've talked once. I do need to schedule another call. That's a good reminder. We did touch base Q4.
Yeah. And then I get a lot of things thrown my way. You got thrown an introduction by me and my business partner as well. Like, so oftentimes people say, hey, there's a founder, they want to buy out a business partner, or hey, they're looking to be acquired by the strategic. If you want to talk about M&A, we recommend Peter. Go talk to Peter. And I'll usually take a 15, 20-minute call, meet people. And I meet someone,
Mm-hmm.
and I'm like, oh, partner buyout. If you all listened to Mark's original story, that was one of his transactions that he did, which was a partner
Yep.
buyout. And I
Yep.
said, Mark would be a great resource for this founder who is experiencing something that Mark's done firsthand. And I also knew that Mark was looking to potentially invest, and Mark's pretty savvy. So we introduce you to Megan,
Yes. Yes.
part of Refine Labs. I'll just use that as the setup, and then take it from the introduction of Refine Labs.
Yeah. So, like all the transaction is, fully public. We've been, since what's about over almost 6 months now, almost 6 months since we've served. So we can talk about a lot of things. There's some things I might gloss over when we get into specifics. But no, the actual introduction was great because again, it was a, hey, Mark, do you mind jumping on the phone and just kind of helping this person out a little bit? And the more I listened, and I think in hindsight, yes, you and your business partner both had other things in mind of like, Mark may be able to help with some capital. But when I got on the phone, it wasn't that at all, right? It was just, tell me about your situation. She was a minority owner of the business and had a majority owner, and the majority owner had kind of said, I want to move on and do other things, which as that happens, right? It happened in my business. I had a business partner. He was at the time, the first business partner we bought out was majority owner, and the two, minority partners, we had to figure out how to buy him out early on in the process, right? So same kind of thing. What's interesting is when I was on the phone with her, I said, you can do this fully on your own. Explained at the time. Now the SBA rules have changed. We made it in before the changes, but at the time, you could leverage the equity she had and some other things. I'm like, you probably could get by with a pretty appealing or like swallowable down payment for her, and take on an SBA loan and buy her partner out. What I came to learn over multiple conversations was Megan was looking to scale Refine Labs, still wanted a partner, wanted somebody who could help drive that, wanted somebody who had done it, somebody who had sold before. Because I think there is a goal of driving Refine Labs into a size where it kind of runs out of steam with Refine Labs and needs some additional capital, right? So essentially, we will grow it until a point that we need somebody else's money to help grow it, right? That's why, fast scaling agencies need to sell. Usually it's not just because the owners want to take some money. It's because you need more capital to keep up with the growing demand and on organic growth. So we were in alignment on kind of like, what I could help with, where she was at in the business, her want for a partner. So it quickly turned from a kind of general conversation call into, how could this work? And again, I had, it was a very interesting source, it kind of came through, you, Peter, and Felix. And so I had, followed up with you guys and said, hey, how much do you know about Megan? Do you know the situation? So I just kind of reached out to Megan and said, how about I jump on a plane? Like she was up in New York. And so I jumped on a plane and went and met her in person. Because, again, you're trying to, if it was going to move, it was going to move quick. The majority owner had already told her like, hey, if you can afford to buy me out, here's kind of a general number I'm looking for. So we kind of had some rough parameters there. So I went up there and we talked about how to make it happen.
I want to double tap two things in that. One is, although you are extremely likable, which is dangerous because everyone likes Mark, you are also very much aligned with Megan. Core values, personalities. You don't know this from Mark on this Zoom call, but if you know Mark in real life, he's married to a very high functioning and efficient and effective professional. And so he's used to a strong operator's energy, not only in his own businesses, but also like in everyday life. And that's Megan. And so sometimes that can be in conflict in founders or in partners where you have someone who just is operating at a resonance that others aren't gathering. Just your energy just matches hers really well, which probably made those first conversations really easy to.
Yeah. I think it's interesting. The values and stuff, like literally like some of you look at the values kind of start at the top of any company, right? They kind of start with the founders at this size of a company. And kind of her values, which lead to the kind of core values that Refine has. They call them something different, but I'll use the term core values here. And then the core values that G&Gf had, which kind of, were obviously a lot came from me, were, I mean, almost, there was actually some words that were so similar in like the way we described each value as well. It was definitely alignment there. But the other alignment was, Megan wanted to run the company. She was minority, which means when the majority decides they want to do something different than maybe what Megan, who was the CEO and running things, wanted to do, that was it, right? It's like you get that kind of like final veto power. And I'm not saying that happened a lot or anything. I just am saying like that's a situation that I think she found.
It's extremely common.
Yeah, she found herself
especially when one's more in than out.
Yeah, and so, or even if it's just always hanging over your head, right? So we had the conversation of, like I had no problem, with her being a majority owner. So we got that out of the way. And I also said, look, I also am not looking to run operations. I'm not looking to run not run operations, be an operator in an agency. I love the mergers and acquisitions part of business. So I want to focus on that. I want to go out and talk to other agencies and find ones that fit into Refine, while I'm also looking for agencies for Grandin Holdings and other portfolios. But, like our goal is to use, and Refine Labs from that side is to use inorganic growth to basically match or be a little bit more than the growth, the organic growth that Megan's driving in the business. So let's say, for example, next year she's still shooting for 10 to 12%, then I'm out there trying to find about 12% growth in inorganic as well.
Yeah. And she reached out to me when she talked to you and I kind of let you take it from there. I didn't want to sway her either way. It was really important to let the process of fit, mature and go through the steps it needs to get to figure out if it's going to work. One of the things I was very confident she could do is she could have done the deal herself.
Yeah, correct.
And she was fully capable of doing it. Yet she is by Gino Wickman's definition, right? She's an integrator. And she's a capable, high-tuned operator who gets a lot of things done. And those types could very much use sounding boards, people who can assist with vision and strategic thinking and problem solving. Because they're just so in the business. And that's exactly what you were wanting to do because you don't run your agency. You already did your 12 years of agency prison operations. You've been freed from that. Now you're an investor and you're looking to grow your portfolio. The last thing you want to do is have a partner who's overly reliant on your intervention. And it was just a very good cross of the Venn diagram.
Oh, it was a perfect fit. And by the way, not just perfect, but perfect, I think, first portfolio to have. So for somebody who is that dynamic, hopefully people over the time, that I get to meet in conferences will eventually meet Megan or have met Megan. I think she's come to one of your events at this point.
Yeah.
She's incredible. She is absolutely an amazing CEO and just an amazing operator. Like you said, runs at a different level, hard to keep up with.
In all the best ways. Yeah.
Correct. Yeah. And so, but.
And fun. If you're listening to this, you're fun, funny, great time.
We've already, this summer, my wife and I went up and we went boating with them up in Long Island. And it was, it's been a good fit. But what's interesting is just like I love jumping on the phone with agency owners and chatting about stuff, now I get to do that with something that I have a financial interest in, right? So when I'm jumping on the phone and saying, okay, which hat am I wearing right now? Do you need the M&A hat or do you need the strategic advisor hat, right? I'm not an owner hat here, right? It's just kind of a strategic advisor. And we'll even talk like that. It's like, okay, I'm putting on this hat, like this is not a Mark the investor who wants this. I'm like, just let me bounce something off, we'll go back and forth. And those are some very enjoyable conversations. That's what I think she was looking for in a partner. It's definitely what I was looking for. I mean, it still keeps me around and, fresh and, like getting to talk about things that use my experience and use all my time in, stay on top of some of the things, different changes and things out there as well, but without having to like really dive in and let me step back and continue having conversations with other agencies that might be a good fit inside Refine or inside Grandin Holdings.
When I talk to people about business buying, and they go, well, I'm going to sell, I'm going to not buy the type of business I sold. You didn't have any restrictions other than legal marketing. And you even, threw out in our early discussions around, okay, what other types of assets can you add to the portfolio? And of
Yeah.
course, you can add other things, other
Mhm.
professional service businesses, real estate, manufacturing. You can get into completely other categories. But one of the things I always recommend, especially as you're building your first investment, and this is just sage investment advice, invest in businesses you understand. And it's the easiest to do due diligence on.
Oh
It's
yeah.
the easiest to have positive intervention and support if needed. And you get to leverage the experience you had running that business for the investment versus Mark having to go learn heating and air conditioning and having to support a different type of professional service employee or founder. And that's just a new thing you have to add on top of, winding down the business, closing your office, building the HoldCo, setting up the corporate structure to implement this strategy. Those are all things that you had to do too.
Right. Yeah. People, processes, systems, right? All of that is had to happen and that's where I was learning stuff, right? Is like, I'm learning how to be an investor, how to think about, like being above the businesses and looking and evaluating, how am I going to measure my HoldCo? How do I report to my family office, which is right now my wife, right? So, how are we structuring these things? And so like looking at building all that out was going to take work. So why have to worry about not understanding the businesses I buy? So that's why I started off with agencies. And I'll probably still stay in agencies for at least the second portfolio. It just makes sense. And when you talk about due diligence, man, you do agency life for 12 years and get to the point, about 5 or 6 years in where you really take it serious and start understanding the numbers and the metrics and some of the benchmarks and really try to work toward that. And, like open book management, all the things we did, EOS, right? Like I can look at a balance sheet, I can look at a P&L for an agency and tell you a lot really fast, and then probably follow up with just a few questions
Yeah.
and, like quickly dial in.
That pattern recognition helps with efficiency, especially at volume and interactions with the marketplace. Well, let's go into the deal. So you met Megan in person. I talk about governance and getting alignment on that early on. You did that. You were talking about how we're going to do this thing together. What did that in-person meeting look like? What are some of the discussions and topics?
Yep.
What were the ways that you were supporting her? And then give the listener what the deal needed from both of you in regards to how to get it done. Because I think you moved pretty quickly after that in-person meeting.
Yes. So we had talked a couple times on the phone beforehand. I'd said the same thing. I'm building this, out. I'm, building some stuff in the spreadsheets here, stuff I can walk her through. But I said, like, I could show you how to do this on your own. And if I come to New York and leave and you have a template to do it on your own, I'm okay with that too. Right. But you wanted, she said she wanted a partner. So that's why I'm flying up so we can have some serious discussions. So went up there. What I had proposed, because the goal was by both parties to have the majority partner bought out and done as, like, hopefully in one transaction, right? Like, and the best way to do that was basically, do essentially debt financed, right? So we get all the cash.
There you go. For the listener who's not savvy about that, that meant the Chris, who is the business partner, gets cash on close.
Yes. Yes. So the deal would be, which is why we leverage an SBA loan. And just like I said, for the same reasons that I recommend if she was going to do it on her own, use an SBA loan. There was a lot of benefits to that for us. Now, I mean, we did start talking to other capital, right? There are other ways to do it. They had a strong relationship at their current bank. There could have been a route down that way. But the fact that she had equity and that could be counted into, whether it's down payment or just, the benefit to the SBA process really made it kind of palatable to go that way. But the goal was get Chris paid, done, move on. He can go work on the other businesses he wanted to do, which it was his goal. Like as I understood it, I think they had even gone down the path of trying to sell, like the whole thing, right? Like just like at one point. So there was, other conversations I think that had happened or something. But for us, it was the SBA loan got Chris his cash on day one, and then we were paying a bank. So it was a debt finance. We're paying a bank off as opposed to paying the seller financed over time, right?
Yep.
Which I know a lot of deals, seller finance is great. We would
You
love
did
that.
a seller finance on your buyout, right?
Yeah.
It's actually very common in partner buyouts.
Yeah.
It's not always appetizing for a founder to put leverage on the business and be left alone with the company. So the other one got a bunch of cash, and the other one has to pay down that debt. And so it's very common for the partner who's leaving to accept seller finance, carry the note, and get paid down over time as a safe transition out of the business.
Yeah.
But in this case, he was out. She was running the show. So there was no material risk that you could identify through preliminary due diligence and due diligence. That would be, okay, well, yeah, we can pay him. It's not a material adverse effect that he's out day one because he was already out.
Yeah. Yeah. That's right. And so she had been running it. So I really, when we came into due diligence, well, especially when you came into like reps and warrants, right? I'm a little less worried about things, the lawyer on my side's like, because of Megan, it's a little bit, like he's okay sleeping at night, letting go of some things he would never let go of, right? In a process. So the due diligence process was a little bit smoother that way. But before I jump there, I
think you're going where I think you're going to go. So go.
Oh no, I was just gonna say, I just wanted to kind of like stick on that SBA for 1 second. So, like I said, they had a relationship with a bank. I don't know if they were an SBA bank. They did have a conventional option for us, but the SBA, I leveraged a broker, he had reached out to a number of banks and came back because of the type of deal. I mean, this is a strong EBIT, strong revenue. We weren't looking for, like the amount that we were looking for was well in the limits of any bank requirements. She had equity already coming in, which was a big part of it, right? So because of that, we ended up getting one of the banks came back at maybe like a non-SBA. Everybody thinks SBA, they think, crazy high interest rates. And so this was like getting closer to a conventional, but you still had the 10-year payment. Yeah. So we ended up having a nice deal. Now, it was with a larger bank, which we knew meant it was probably going to take longer. And like our broker even gave us a heads up. It's like, it'll probably be double what you're used to. Because I had done SBA transactions before.
Yep. So the LOI had 3 parties involved.
Yep.
So let's quickly touch that before we get into the due diligence and the lending side, because you have a deal with Megan. Mm-hmm. And then Megan has a deal with Chris, and all of you are coming to an agreement on how you're going to work with the lender to get Chris's money.
Yeah, the structure was, Grandin Holdings. So, my holding company, and technically, like a sub that I had created for this transaction, right? If we're getting nuanced. But so Grandin Holdings and Megan were combining to create an LOI for Chris, the seller. So we were the 2 buyers. And that needed to be like that. We knew that needed to be like that on paper when we went to go talk to financing. So we had already known that. So we made sure it was like, papered that way. And it was the actual transaction. That's what we were doing. It did, it added confusion, I'll be honest. But we knew it needed to be done to make it through the banks. Then I kind of had to have an LOI with Megan that said, here is what Grandin's doing as part of this transaction for us buying him out, so, and that was where we were coming in, providing all the down payment capital, providing some of the expertise, the legal and the know-how, the time, right? If something was required extra time and Megan did need to be on the call, I took it because, that's what we were bringing to the table, let her go run. I didn't want to mess the business up, right? So like, when you pull somebody away from running the business to go do a transaction, it's very disruptive. So I wanted to
Yeah.
have no disruption. We did not end up having no disruption because an SBA process is very grueling. But yeah, so like it was two LOIs kind of going on there.
Yeah. You also had a unique situation, which was the negotiation itself. You didn't interact with Chris very much. Like,
Correct.
to kind of like say it in like a broad stroke, you bought into a business, or Megan sourced you as an investor for a partner buyout, and you didn't have to interact with the seller.
Yeah, we had a couple early calls, and then I think the way we wanted to approach it was a little different than, like he was initially thinking, or maybe it's some advice he had gotten, And so we said, well, this is kind of like the right way to go about the process. This is the most fair way that gets, like we try to check, we always go for win-win, right? We checked all the boxes he wanted. We made sure we weren't, risking the business in the process. And then, we ended up somewhere in between. And so at that point, I think he just had a comfort with Megan. And so we really had like, she was the point person. He would, not jump on meetings with us. He would just call her. So that's how we did it. And then he was very quick. I think he was doing some travel. And so we actually were working through counsel for a bunch of this, which I don't recommend. It gets very expensive because as soon as you have to talk to their counsel, it means your counsel needs to be involved. So that slowed down a little bit as well, I think, the process. So look, the deal didn't take, like I've heard, things taking a year all the time. Like it was still 4 months, 5 months maybe,
Yep.
from LOI to close. But it could have been, take the SBA out and take the having to go through a lawyer, not having the other party on the phone. It could have been probably half the time.
Yeah, for sure. You didn't bring on, well, let's talk about who supported you in the transaction. So, because you had sold and you've been through intense QOV, you've done due diligence on business, you're able to do a lot, but you got some outside expertise to support you. What did that look like? And what
Yep.
did you carry the burden and responsibility in the deal yourself? And then the next thing I want to tie to that is just kind of give us a time frame for that
Mm-hmm.
as it relates to getting the actual deal done versus financing.
Yeah. I mean, our initial conversations were like early March, and then deal closed mid-July. Okay. So just roughly like that. That's still pretty fast. It's not as fast as my last transaction.
I just want to make sure if you haven't listened to his previous episode, you don't know this, but if you listened to his previous episode and read his LinkedIn posts, that's within a year from him selling. Just put that out there for folks.
Yeah. So I do. Yeah. So I had an LOI. My last business, we closed within 30 days. And then before I hit a year on the sale of that business, I bought a new business. So, yeah, I like to move through the process pretty fast.
Yep.
So, 4 to 5 months was a lot longer than 1 month, but it still
Four
was
times as long it took you to sell in the past business.
And again, I talk to people who, it takes, like 9 months, consistently. And I'm like, oh, I guess that's still pretty fast.
Yeah, the average transaction is 186 days, and it deals with all sizes and scope averaged out. Most from when you actually like meet someone versus getting an LOI, that could be a period of time. LOI to close is that duration. And then listen to the podcast if you haven't heard it. We ran that process very disciplined, and Mark was the project manager for getting the deal done. And he basically did the same thing for his own buy side. He ran a buy side process just in reverse, which is selling. And so he was very capable at making sure that the deadlines, the due diligence details, all these things will deliver to Megan promptly. What was a benefit to Mark was Megan was also delivering back those details promptly.
Oh, yeah. Yeah.
Like outside of financing, the deal was, and Chris, the founder, you guys were moving so fast.
Yeah. I mean, you have two people that definitely like to move fast when it comes to this stuff. So we definitely were frustrated by the bank a lot. And I feel bad for the banker who, were like, well, when are you going to have that for us? And it's their process, right? We sent them stuff on Thursday, or they sent us a list on Thursday, assuming we get it to them like in a week, and we get it all to them on Friday, right? So they didn't even plan to look at it till next week. So it was funny. But yes, it was so talking about the different experts and stuff. So Peter, I full transparency. you're a paid advisor for me and Grandin Holdings. So you were involved in the process heavily in the deal structuring, heavily in the, trying to figure out how to do the double LOIs and building out the communication for Chris. And because he was only talking to Megan, jumping on the phone and actually helping me coach Megan on how to talk about the things I had built, right? So that was very helpful. I leveraged, an outsourced QV. So I did do a quality of earnings, but I also, because it was the first portfolio, and I hadn't, didn't have all the process and team in place internally, I dove in and spent a lot of time going through all the numbers and stuff. So I essentially did all the due diligence outside of Q&E. And then I did leverage fractional CFO to take a lot of the numbers I had built, and, forecasting and stuff, and just push back and do like a downside analysis for me. I mean, we did an upside as well, but like really focused on the downside to make sure that, again, we were doing debt finance. Like, how bad does it have to get before we can't pay the bank is kind of what you want to know. And it would be really hard to get to that point. So we're like, all right, we're okay. And that's where we wanted to be. I actually went as far, I think you might have actually suggested this, that I went as far as building like an investor presentation to my investors, which
Yes.
was my wife. And then
Yes.
you and fractional CFO were on kind of like acting as like a committee pushing back on some things. And so there was a couple of things I had to go follow up on and dig into more, which was great for the process. Definitely helped some things. I will say I also did leverage AI and like kind of did the same thing, like created a committee of people in some chats and worked through some things that way and got some, again, got other things to kind of dig into, which was very helpful as well. So process of leveraging.
And a lawyer. That little piece of contribution to the deal. You needed two things: transaction, corporate structure, because you need enough reorg, and you had tax implications.
Yeah, the lawyer, like if we talk about the lawyer, so like those were like fractional resources. The lawyer ended up becoming almost like I felt like a full-time in-house counsel for a bit. He was great because there were some tax structural things going on. Yeah, and this is things that in the virtual world, people may hit more and more, but you had a business that was founded in one state. Nobody really lived in that state anymore and people lived elsewhere. So we had nexus in a state, but not where the person was going to get taxed for the deal. And so how do we structure that? And then the person, like the person buying somebody are in two different states and none of the employees are there. So do they even have a client nexus or, so figuring a lot of that out and creating a deal that during the process of buying creates a better entity for the virtual base company for the two new owners was a heroic effort, but having a tax lawyer, kind of on hand was very, very helpful in that situation. Because if something goes wrong, tax lawyer is the one who has to go deal with it. So it was nice having them every step of the way.
Yeah, you end up investing quite a bit in transaction costs relative to the size of the deal from a purchase price, but also from a deal structure perspective. It had complexity and it needed additional attention to get there too.
And I don't want to scare anybody on this because the reason was because we were doing a partner buyout. This was a equity sale and we were leveraging Megan's equity with the SBA to get a better terms. It had to be a share sale, right? Like we had to do it via equity. So if we could have done an asset sale, spun up another entity, put everything in there and move on, that would have been more standard, a lot easier, taken a lot of the risk away, reduce some of the fighting back and forth on reps and warrants, between, because you had two owners who were running the business now, and the other. So it was that it did bring some complexities with it. It was worth it. I mean, the deal structure fit the deal for sure, but I don't want to scare people that, you need a tax lawyer every single step of the way in most transactions.
Yeah, it's you were able to do quite a bit of the heavy lifting where you needed support was more just in specialty contribution given the unique attributes of the deal and the companies. Because this was the same counsel you had worked with to sell the business. So
yeah, so had a good relationship, had some stuff there.
You had some carryover in regards to like, okay, how the proceeds were going to be managed, how we're going to deploy them, how the corporate structure is going to be facilitating that. Like it was some continuity between those transactions that is very helpful building out your comfort in doing deals.
Yeah. I will say, like I joke, it's like, well, I have some great templates now for a type of deal I don't want to do that often. So I still need to do the asset purchase templates.
Yeah. So let's unpack a few things in there that were great lessons for people. So you got this LOI accepted. You had lawyers involved in the crafting of the LOI just because of the complexity. It also needed to be an LOI that could be given to lenders, prospective
Hmm.
lenders. The broker can circulate it. You can get term sheets and get feedback back, and then understand how to finance this deal. You went into due diligence. You did due diligence, but you're keeping one of the business partners there, and you're buying the shares. So you're going to be liable for things in the business by not being able to separate the revenue generating assets from its liabilities. Let's talk about what that meant in the negotiation of reps and warranties, because that was kind of a sticking point at the end that we ended up giving on because of our trust in Megan. But highlight that for the listener. When you're doing a share purchase, what were the things that you were being advised to be concerned of, and how are you trying to protect yourself?
Yeah. So typically in a share purchase, you would require the seller to represent and warrant that that's reps and warrants, right? That they have not done a bunch of things that like taxes have been paid, no employees are, have lawsuits out. You haven't, all the things, like there's a whole list of things that you say, you certify that you haven't done any of these things. As a manager of the business, because we're buying the business, right? If you went and did something weird in your personal life, that's not a problem. But like, this is what the business is. So as manager of the business, which the seller was, right? So typically the majority owner is the member manager or depending on, I guess, the type of structure, but that's probably most. In this case, we had somebody kind of saying, well, I mean, I wasn't the CEO, so somebody else is the CEO, and you're buying that. If that person is buying my shares, I should need to warrant something that they already know. Not totally unfair, like to be honest, right? Like to
Yeah.
to really dig into it. It's like, all right, like, and then Grandin Holdings, you're investing in with this person, so you should be trusting that they ran the business well. I'm like, all right, because it wasn't like if it was just me buying out the seller, then yes, like they would, I would require all that. But it was fair. It was a push of a fair point. So yeah, no, we went back and forth on it, and finally it's like, well, wait a second, and I think a lawyer just came up with this, right? He's like, well, are you guys confident in the way you've been running the business? And Megan's been running the business the last few years, and any of the skeletons in the closet, and we're good. And we're like, yeah, okay, well, let's just have him personally say, I personally haven't done anything, but if the business has done it, I'm not sure because I wasn't, the CEO. And we, went back for the point when Megan became CEO. Fair. Like it was a very fair way to go about it. And, but it was unique for sure. Yeah, some of these things are really good to learn from, but you may not run into it again.
You hope you don't have to run into it again. Yeah.
Yeah.
You also had this conversation around an F reorg pop
Yeah.
up, and that led to a little bit of sticky back and forth with opposing counsel.
Yep.
Explain what happened.
I don't want to get too much into the structure on this one but essentially for, like there's kind of like a tax nuance structuring of moving a business from one state to another and reorganizing it out of an S corp. And we did that as part of the sale. And it just added, it made all the sense in the world for the future going concern because I'm the investor coming into this, right? I'm the reason that the capital will be there, the SBA loan is there and stuff to be able to buy the seller out. So like this is a requirement. So the deal wouldn't have happened if we couldn't have done this because it would have created a whole bunch of tax liability for the investor that normally, like just it didn't make sense for the deal. Like there's no reason to come in and pay all these extra taxes for just a poor structure.
Yeah, F reorg is tax-free corporate restructuring, and it
Yeah,
has some requirements within it.
correct. Correct.
And it's not. There was pushback though, so you had to negotiate against some
Yeah,
pushback on that.
that's what I want to get into, right? It's like like there's nuances of like a CPA and then a tax lawyer and in this state and that state and like the way I interpret this or that, and so like we did things. We ended up adding a couple extra steps in. Again, this was the I mentioned my lawyer who became kind of like our in-house counsel during this process. We had to add some extra steps in, some extra DocuSign, some extra entities and whatever, and whatnot. Again, I don't want to get into the nuance because I probably couldn't even explain all of it at the level that it needs to be explained. But it, appeased both parties but moved the deal forward. But I mean, it did hold it up. for a couple weeks just because nobody was wrong. It's just interpretation. And so we said, okay, well, what would make you happy? It's like, well, if we did it this way, it's like, okay, we'll do it that way. Are we okay with that? That still works. Okay, great. It's a couple extra hoops, and we ended up with an extra entity that sat there on the side for a couple months that we had to do something with. But yeah,
Yep. Yeah. And what often happens is someone in a deal gets a lawyer, gets an accountant, a CPA, gets someone who has experience or lack thereof or an opinion on something that's within the deal. And they bring that bias into the deal. And instead of coming together and collaborating, they tell the seller or that side that can't be done. And whenever someone in a deal hears that someone's presenting something that shouldn't be done or can't be done, it makes them kind of like doubt the deal or maybe lose a little bit of trust in the people who are buying. And it's really important that the person and that you as a buyer invest in having someone educate all parties. And that's what your lawyer did. That's what Joshua did. I think you did a joint call with the CPA, if I'm not mistaken, right? There was like everybody getting
yeah.
aligned, I think, at the end of the day.
Yeah, I mean, we got second opinions. We got what? Yeah, it took a
Yep.
bunch. And to be fair, like the other thing it was doing is probably putting some doubt in all parties' heads, right? It's like, well, like everybody's saying different things, but at the end of the day, I think like I said, we did some extra things that made everybody. So I mean, it's about as buttoned up as it can get now. But I mean, and you talked about this nuance earlier. The the seller was doing some travel, was sometimes only available at certain times, and maybe by mobile phone or however, getting things signed. And I know you've dealt with this as well, but like just getting it's like, okay, we're going to sign a deal, and you're not by a printer or internet connection. So yeah, it was fun kind of going through that, and then Megan be the only person talking to him. So now my lawyer is has educated me, but now he's getting on the phone with Megan so she can explain to Chris. And again, it all worked out. And I think, by the way, I don't want to, make it sound like just because you get different advice from another attorney. I mean, I think they had some fair points, and we ended up with a better finished product. So, you go for the win-win.
Yeah, 100%. And so you went back and forth. You had purchase agreement done, and you need to hand a version, pretty close to done version, to lenders so they can finalize approval. From we've got the purchase agreement, we're ready, to funded. How long did that take? Just
Depends on who you
longer than it
ask.
should have, but how long did it take?
Depends on who you ask. Like I think if you asked Megan and I, it probably took, we were told it would be about a 1 to 2 weeks from that point, and we thought it took 4 to 5 weeks. But it kept coming back to, oh, well, we need this extra thing. I'm like, well, you didn't ask us for that extra thing. Here it is. Like within hours, right? Like here it is. Here it is. Like okay, yeah, we have that. Here it is. And so again, I think it was just we were dealing with a large bank, but because we were dealing with a large bank, we also got a very good deal.
Yeah, got good terms. Yeah.
Yeah. So the extra 4 weeks was certainly worth a few points off the
Yeah.
interest.
It was annoying. It was
Oh, I was very frustrated. Let's be honest.
frustrating, but there wasn't a material consequence. Although there was a few times when like, is this going to happen? Sellers always get a little flighty, but you had gotten so far that there was a very high probability of close. And so
Yeah, I certainly had more confidence in this than, I think there was times when my partner or my now partner, like the one I was buying with, was like, is this going to happen? Like,
Yep.
like it's just like banks are slow and they're not saying no. They're just asking for more documentation. Like they've said yes at this point.
Yeah.
Like I know what yes was a while ago. Now it's just checking all the boxes, and they have requirements, and they just forgot to tell us a couple of them, and we have to hurry up and go get it.
Yep. Yep. And you used a broker. And so the advantage of the
Yeah.
listener.
So I leaned on the broker a few times.
Yes.
For sure.
Yeah, having someone be the intermediary, having someone who can circulate, get this in front of people, get you favorable terms. So it's not a one-to-one relationship with a single lender you're wedded to. Is also a good move that we highly recommend. You closed and it ended up getting funded and did exactly what you wanted it to do.
Yeah, I mean, I can't stress enough like the benefit of a broker. I think you and I had a conversation with somebody recently. Just the first time I had met the person, I was like, "You should use a broker," and
Yeah.
they're using a broker.
And we're talking about lending brokers. These are individuals who are paid by the banks, by the lenders,
Correct.
to bring them deals to
Yep.
fund.
Yep. I think you've talked about them on their podcast before.
Yeah, I highlight them in everything that I do, which is anytime you can have leverage or get someone who can help you get your deal in front of more people, it's very advantageous. So you closed, it was
Yes.
funded. You gave everyone the date, but like circle back to it. Well, when did you close?
It was mid-July. Um, it was such a crazy time of between bank and close and what was signed when and the F reorg and stuff. I don't even know if I give you a specific date, but let's just go with mid-July. Um,
Yes.
because I think there's like 4 dates on different documents that are ultimately, like which one is the final.
Yeah. Like it doesn't matter. Chris got his money, you got the business,
Yep.
and Megan got control.
Yep.
Those are the things that needed to happen, no matter the sequencing of events that required funding. So Chris gets money. He's out of the picture. He's gone. Megan becomes 51% owner in Refine, and you become 49% investor, business partner to Megan. It's a fairy tale of last. If we take from when you closed from when you sold, you've had the experience that compresses time for any professional. You went through a sell process with a private equity backed strategic. You then leveraged a portion of the capital and reinvested it into another asset that is within a area of your expertise, your capability and excitement for the industry and the business and the operator. And then you closed within a year, and you're not being pulled in anymore. You're not the owner of a business that has to go solve problems, employee disputes. You're supporting a founder who wants to do more and drive more growth. It's what a lot of people want to accomplish. And I think, from my belief, many founders of agencies, entrepreneurs are capable of doing. What's your advice for someone who hears that and goes, Mark, I want to be just like you when I grow up?
That's funny. If I had to give some advice over the last couple of years, the high level on M&A side was switching my mindset to start looking at the business as a piece of my overall family's portfolio, not just, like my baby. That was very interesting, right? But, like maybe that's coming with some time in life, like kids are out of college now and, it's just the two of us and suddenly going, okay, what does the future look like? When you're not just running around going to soccer games and, lacrosse tournaments and stuff. So then, going straight to your office and dealing with all the problems and fires of an agency. So coming on the other side of that, I think helped me with the mindset was very, very key. The second thing was, I guess, just going and talking to lots of agency owners with this idea that, what if I could go in and do something to help that agency? What if we could combine 2 or 3 agencies, understanding what's out there? And the final thing is, and this is something that led to selling G&Gf, but going out and talking to who the next step buyers are has been really eye-opening as well, right? So you start talking to people going, they're looking for this thing. I was also looking, we were thinking that this would be a nice little service edition. They don't care about that at all, but they're asking this question and we don't have that, so maybe we need to go acquire that. Or the revenue EBIT numbers they're looking at for like next acquisitions and stuff, like, okay, we know kind of target numbers. That was the other thing too, is like talking to where you would exit.
100%. Now you're Refine Labs and Grandin Holdings.
Yes.
So let's bookend this chapter, because I'm sure you're going to be back on with another chapter here soon. Let's bookend this chapter with, okay, what's Refine Labs looking to do? You are running for Refine Labs. You're proactively having discussions with prospective sellers that are both referred to Refine. Megan knows you're actively sourcing opportunities, but you're also looking at other investments for Grandin Holdings. So
Correct.
tell me where you're at, what you're looking for, and if the listener can hear themselves in you, what are some of the things that you want them to know about your investment thesis, both for Refine and Grandin?
Yeah, good question. For Refine's looking to scale where we want to take the brand promise that Refine Labs gives to their clients as far as we can until we need to, like leverage somebody else's money to grow it, essentially, sell, be acquired, merge in, something like that. Private equity money. We'll take that when it gets there. But the goal is to scale certainly well past 2 million EBIT and get, because they're on their way already. So it's a strong brand.
It's inevitable.
We do want to use inorganic growth though to help get there. There's some service lines we want to add. There's some geographies we want to add. I mean, moving out of like we already have clients outside of the U.S., but getting some presence in with people and offices maybe in those locations could be interesting as well. So right now, geography, and there's a few service lines. We're talking to a number of agencies right now that it would be a good fit for Refine, but always happy to talk to more. When it comes to Grandin Holdings, looking at still for my second portfolio, still want to stay in the agency world. I cannot do legal marketing, so for a few years. So that's what I'm out of.
Three and a half, three
another
years
couple
and
years.
9 months.
Yeah, another couple of years. No, but I am looking for agencies that maybe are somewhere around 750 to $1 million in EBIT for the start and build around for that. Look, I had a lot of experience in that kind of SMB space with G&Gf, and so if I could help somebody in a different niche in that space, that could be interesting as well. There's a lot of opportunity there. I'm also looking into possibly doing something in Latin or South America and helping bring that to the U.S. market via like some kind of interesting merger. So those are areas I've been looking at it from Grandin Holdings perspective.
Wonderful. Best place for folks to reach out to you?
So I have a website, grandinholdings.com. Hit me up on LinkedIn. I try to be active on LinkedIn. I'm pretty good at messaging on LinkedIn. I'm probably not as good as posting as you would want me to be, but yeah, I'm pretty active on messaging. LinkedIn as a source. My email's available on my website as well.
Yeah, and so take a look. We'll include in the show notes Refine Labs. Megan posts a lot on LinkedIn as well. Mark is a great resource, not just for a founder who's looking to sell and potentially be acquired or invested in, but as a craftsman of M&A and a passion for building a generational HoldCo for his family. So I highly recommend. He's extremely gracious. Highest caliber of people. And if you have the chance to be bought either by Refine Labs or supported in your future growth through Grandin, I can't recommend it enough. So Mark, I appreciate you. And I hope to have you back on the podcast sharing your next acquisition within a year of closing Refine Labs.
Awesome. Okay. Thank you, Peter.
If you like this episode, probably like one of our other episodes. Click here.